Good morning, students. I am Dr. Majini Jaspalla, Assistant Professor. In this class, we are going to learn about methods and techniques of departmental accounting, 6th unit, block 2. In the previous class, we have learned introduction of departmental accounting. Now, in this chapter also, let's we see the introduction of departmental accounts. Small hints I have given in this unit about this departmental accounts. After that, we'll see the techniques. Departmental accounts are prepared in such a manner that all desired information is available and a departmental profit can correctly make. Departmental accounts refer to the maintenance of accounts of a business in a manner that makes it possible to ascertain the operational results of each activity, section, or department by preparing separate trading and profit and loss account for each any of the four. The first one separate set of books, the second one accounting in columnar books form. First, we see the separate set of books. Under this method, the accounts of each department independently maintained. The departmental result of all the departments collect and take into consideration to find out the net result of the organization. Next, we can see the accounting in columnar books form. A departmental trading and profit and loss account open for each department in a columnar form together with a separate column for total to ascertain the individual result of the different departments and also as a whole. But the balance sheet prepares in a combining form to incorporate the purchase and the sale of goods, the subsidiary books, and also the nominal accounts into the ledger must be ruled out with extra columns for each department in arriving at the desired departmental figures to prepare departmental final accounts. If there is a larger volume of cash purchase and cash sales, the cash book also must maintain separate columns for cash purchases and cash sales of various departments. Now we can see the methods and the techniques. When accounts are finalized, departmental trading and the profit and loss account is prepared in columnar form to find gross profit and the net profit of each department. The next point is maintenance of records. Departmentalization of expenses is another important point. Here the expenses are related with the direct expenses and the indirect expenses. In this, indirect expenses are connected with the expenses which cannot be apportioned and the expenses which can be apportioned. Then interdepartmental transfer. Interdepartmental transfer at a cost price and interdepartmental transfer at a selling price or loaded price. Then we can see the basic allocation of the expenses, how they are allocating their expenses. The first column is we can see the expenses. The next column we can see the basis of apportionment. See the first column, salesman commissions, how they are segregating the expenses related to the salesman commission. When the companies are giving commission to the salesman, that is expense for the organization, right? So the basis of apportionment is they are apportioned that sales of each department based on the sales of each department only they are apportioned. The next expense is discount allowed and carriage outwards. Any discount allowed and carriage outwards are there now. They will apportioned based on the sales of each department alone. Then bad debts, provision for discount on debtors. These are the items are also they are apportioned based on the sale of each department. It depends on the sales. Okay, so the next item is advertisement and packing expenses. The companies are giving the advertisement for their product, right? Then only they can increase their sales volume. and they are doing the packing in the very good manner for attracting the customers. The packing are also the advertisement of the organization. So the advertisement and the packing expenses are also sales of each department based on the sales only. Then we can see the traveling of salesman salary and the commission. That is also depends on the sales of each department. Then we can move for the discount received. The discount received are apportioned based on the purchase of each department. Then provision for discount on creditors. These are the items are apportioned based on the purchase of each department. Then freight and duty, purchase of each department. Then carriage inwards also depends on the purchase of each department. Then we can move for the rent, rates and taxes. The companies are giving rent and they are paying rates and taxes for their organization, right? So here we can see how they are apportioned their rent, rates and the taxes. That is based on the area of floor and space of each department. How much area they are using for that particular department, based on that they are segregating. Then repair and maintenance of building, repair and maintenance of building, and insurance on building, and heating and air conditioning expenses. These are the items are also coming under the area of floor space of each department. Then we'll move for the depreciation of machinery, depreciation of machinery, repairs and maintenance of plant, insurance premium. These are the items they are apportioned based on the value of assets in each department. First, they are valuing their assets, how much assets they have. So based on that, they are valuing the assets and they are apportioned the depreciation and repairs and maintenance and insurance premium. Okay, so then workers compensation, insurance, canteen expenses, labor welfare expenses, supervision and timekeeping and personal office. These are the items they are apportioned based on the number of workers, depends on the number of workers on that they are doing like that. Okay, so then we can see the compensation to workers. Some of the workers they are giving the compensation. When they are giving the compensation, any accident or there, any other issues will be happen with the organization, they will give compensation to their workers. The compensation to workers, holiday pay and the provident fund contribution, group insurance premium. These are the items based on the direct wages. Okay, so then we can see the lighting expenses. The important thing of the factory is the lighting expenses. Depends on the lighting expenses, they will fix the production cost, right? Depends on the lighting expenses and the factory overhead. These are the items will comes under that. But here we are seeing the lighting expenses, how they are apportioned that expenses, the number of light points and area of floor space. Based on this, they are apportioning. Then electric power. The electric power is apportioned based on the horsepower of machine and or production hours. Based on that, they are apportioning. Then the work manager's salary. Work manager's salary is apportioned based on the time devoted by him for each department. Then we can see the interdepartmental transfer. If any other interdepartmental transfer is there now, we can see what they are doing for fixing the product and the product cost and other things. Whenever goods or services are provided by one department to another, their cost should be separately recorded and charged to the department benefiting thereby and credited to that providing the goods or services. The totals of such benefits should be disclosed in the departmental profit and loss account to distinguish them from their items of expenditure. Okay, so then we can see the basis of interdepartmental transfers. Goods and services may be charged by one department to another, usually on either the following of three bases. What are the bases are there? Cost basis, current market price, and the cost plus agreed percentage of profit. Okay, then we can see the elimination of unrealized profit. When profit is added in the interdepartmental transfers, the loading included in the unsold inventory at the end of the year is to be excluded before final accounts are prepared so as to eliminate any anticipatory profit included therein. Then we can see the stock reserve. Unrealized profit included in unsold stock at the end of accounting period is eliminated by creating an appropriate stock reserve by debiting the combined profit and loss account. The amount of stock reserve will be calculated as follows. I have given the formula. How can we calculate the stock reserve? That is, stock reserve is equal to transfer price of unsold stock into profit included in transfer price divided by transfer price. This is the formula for calculate stock reserve. Then I have given some journal entries for better and easily understanding. At the end of the accounting year, the following journal entry will be cost for elimination of unrealized profit, that is creation of stock reserve. First, we can see the profit and loss account data to stock reserve. What is the narration? Being a provision made for unrealized profit included in closing stock. Then, in the beginning of the next accounting year, the aforesaid journal entry will be reversed as under. What is the journal entry for this? For the next year, stock reserve account data to profit and loss account. Previous year, we will write when the creation of stock reserve, we will write the journal entry, profit and loss account data to stock reserve account, right? But in the case of the next accounting year beginning, we will write stock reserve account data to profit and loss account. What is the narration? Being provision for unrealized profit reversed. Okay. I have given some of the illustration. Listen carefully. The first illustration, the question I just wanted to read it. Goods are transferred from Department P to Department Q at a price 50% above cost. If closing stock of Department Q is 27,000, compute the amount of stock reserve. We should compute the amount of stock reserve. We can say the computation. First, closing stock of Department Q. How much is the closing stock? See the question. If the closing stock of Department Q is 27,000, right? So we can write, just you put two columns, particulars column, then amount column. After that, just you write closing stock of Department Q, that is 27,000. You have to write it 27,000. Okay. Then goods sent by Department P to Department Q at a price 50% above cost. What they are telling, goods sent by Department P to Department Q at a price 50% above cost. 27,000 are there, right? So here I have given the calculation. The working notes are also, I have given Department P transfer goods to Department Q at a profit of 50% at cost, right? They are mentioning the profit of 50%. Hence, if cost is 100, the profit is 50. So the transfer price how much? 150. How? Because the cost is 100, but they are adding 50% margin. So 100 plus 50%. 100 plus 50% is 150, right? So how much is the transfer price? 150. Okay. So I have given the calculation for that. Hence, the profit of Department P included in the stock will be 27,000 into 50 divided by 150. 27,000 into 50 divided by 150. You will get 9,000 rupees. Okay, just you can write it in the amount column, 9,000. Okay, we'll move for the next exercise. Illustration 2. Just I wanted to read the question first. Z Limited has 3 departments and submits the following information for the year ending on 31st March 2011. 3 departments are there. Particulars: Department A, Department B, and the Department C. Total column also there. Purchase they have given in units. Department A 6,000, Department B 12,000, Department C 14,400. Then purchase amount, that is in value, 6 lakhs rupees, right? Rupees 6 lakhs. Then sales also they have given in units. For Department A 6,120, Department B 11,520, again Department C 14,976. Then selling price, they have given the amount per unit. Per unit cost only they have given. Department A 40, Department B 45, Department C 50. Then closing stock, they have given in units. Department A 600 units, Department B 960 units, Department C 36 units. You are required to prepare departmental trading account of Z Limited, assuming that the rate of profit on sale is uniform in each case. Then we'll move for the solution part. Departmental trading account for the year ended on 31st March 2011. We are going to prepare the departmental trading account. Okay. 3 departments are there. So we have to prepare the departmental trading account for all 3 departments. First you put particulars column, then Department A column, Department B column, then Department C column. Okay. In the credit side also, you should put particulars column, Department A column, Department B column, and a Department C column. Okay. So then we can move for the next part. First, we have to write the debit side to opening stock. To opening stock, I have given some of the workings are there. See here in the question, they have given the purchase, that is in units, sales they have given in the units, and the closing stock are there, right? So, but opening stock is not there. So we have to find out the opening stock. Okay, so we can see how to calculate the opening stock. Okay, so here the statement showing calculation of department wise opening stock in units. We are going to find out. Normally, you know very well about this, how to calculate the opening stock. The formula also, you know, sales add closing stock less purchase, right? This is the formula for calculating the opening stock. See here, for all 3 departments, we should write the sales. First, you should put 4 columns, particulars column, then Department A column, Department B column, then Department C column. Okay, so then sales in units only they have given, right? You come here, sales units, Department A 6,120, Department B 11,520, Department C 14,976. Okay, first you have to write it. These are the units, sales units, Department A, Department B, Department C. Then we'll add the closing stock. All the items we are going to take only the units. Okay, add closing stock. How much is the closing stock? Or there, see the question, closing stock. How much? 600 units, 960 units, and 36 units for department C. Okay, see here, 600 units for department A, 960 units for department B, then 36 units for department C. Just you total it, add for department A, sales plus closing stock, 6,720. Department B, sales plus closing stock, 12,480. Then department C, sales plus closing stock, 15,012. Okay. Then what we have to, we should less purchase. Okay. Purchase also we will take from this question, the purchase units, right? Don't take the purchase amount, we will take the purchase unit. Department A 6,000, department B 12,000, department C 14,400. Come to this calculation. Department A 6,000, department B 12,000, department C 14,400. Okay, just to subtract it. Subtract it. How much is the balance? For department A, opening stock 720 units. Department B, opening stock 480 units. Department C, opening stock 612 units. We can write here. Okay. After find out the opening stock, we will convert that by the amount. Okay. Amount also they have given the selling price per unit they have given. Okay. So just you convert into value. Okay. So when you are converting that units into amount, you will get for department A 11,520, department B 8,640, department C 12,240. Okay. When you multiply that unit into amount, when you are multiplying that opening stock unit into amount, you will get this amount. Okay. Then we'll move for the purchase. For purchase, I have given that working here. Okay. For purchase cost and purchase cost statement showing department wise per unit. Okay. Selling price per unit how much? Department A 40, department B 45, department C 50, less profit margin at the rate of 60%. That is uniform for all the departments. See here, the profit margin, right? Selling price for each department is varying. Okay, 40, 45, 50. Okay, but the profit margin is equal for the all the three departments, 60%. Profit on sales is uniform in each case. They have given the rate of profit is uniform in each department. Okay, now we can see how can we calculate the profit margin. Okay, see here the working note. Okay, so department A 6,000 units sales into 40, 2,40,000. Department B 12,000 into 45, you will get 5,40,000. Then department C 14,400 into 50, you will get 7,20,000. Total selling price how much? 15 lakhs, right? Total selling price. Just to total it for all the three departments, you will get 15 lakhs. From that amount, you should subtract the purchase cost. They have given in the question purchase cost how much? 6 lakhs rupees. You should subtract how much? The gross profit 9 lakhs. So now we just wanted to find out the profit margin ratio. Profit how much? 9 lakhs. Total sales how much? 15 lakhs. 9 lakhs divided by 15 into 100. That is 60%. Profit margin is 60%. So next you come here, less profit margin. Okay. For each department, the selling price will vary from one department to another department, but the profit margin is equal for all the 3 departments. Okay. 60%. Just you subtract 60%. How much? 24, right? 24 for department A. 40 into 60 by 100. You will get 24. So just you subtract 24. 40 minus 24. That is 16. 16. That is purchase price per unit for department A. Then come to the department B. Department B, selling price 45 rupees. Selling price 45 rupees. For that 45, we have to calculate 60%. That is 27. You subtract the profit margin. You will get 18 rupees. That is purchase price per unit. Then come to the C, department C. Department C selling price per unit 50 rupees, right? You should calculate 60% profit margin. That is 50 into 60 by 100, 30. 30. You subtract 50 minus 30 is equal to 20. That is purchase price per unit. Then already they have given the number of units purchased, right? For department A, 6,000, department B, 12,000, then department C, 14,400. Just you multiply cost per unit into unit purchased. 6,000 into 16 for department A. When you are multiplying 6,000 and 16, you will get 96,000 is the purchase price for department A. So you can write here for purchase 96,000, right? So next, department B, 12,000 into 18. You multiply 12,000 into 18. You will get 2,16,000. So we can write here 2,16,000 for department B. Then you will come for the department C. Department C, 14,400 units are there. Unit price 20. Just you multiply it, 2,88,000. 2,88,000. You should write here 2,88,000. Okay. Then you come to this credit side. By sales. Sales, how much unit they have given the sales unit as well as the price also, right? See, sales unit, department A, 6,120 units. Unit cost how much? 40. Okay. So come here, by sales 6,120 into 40. That is for department A, 2,44,800. 2,44,800. Then department B, 11,520 into 45. 11,520 into 45. How much is the amount? 5,18,400. Just to write it in the department B. Then you come to this department C. Department C, 14,976 into 40, 50. 50 means selling price per unit. 14,976 into 50. How much is the amount? 7 lakhs 48,800, right? Then we'll move for the closing stock. Closing stock already I have given here, we have find out closing stock, cost of opening stock, cost of closing stock. How much? 600 into 16. That price also, unit price also, we have find out here, right? This is the opening stock, closing stock units they have given in the question. Unit price we have find out. Cost of closing stock, 600 units for department A, unit price 16. So 600 into 16, 9,600 for department A. Department A, 9,600. Then department B, 960 into 18. 960 into 18. How much is the amount? 17,280. You can write here 17,280. Then you should come for the department C. Department C, how much? 36 units alone the closing stock. Unit cost per unit is 20 rupees, right? So 36 into 20, you will get 720. So you can write here 720. Okay. Closing stock, department A, 9,600 rupees. Department B, 17,280. Department C, 720. Then we'll find out the gross profit or gross loss. Just to total it, the credit side only is the higher value. Just you total it for department A. Department A, 2,54,400. 2,54,400 for department A. From that amount, you should subtract the opening stock and the purchase. Just you subtract opening stock and purchase. How much is the gross profit? When you are subtracting 2,54,400 minus 11,520 and 96,000, you will get the gross profit 1,46,880. Then you come to the department B. Department B, for B, you have to just you total it. Sales and closing stock, you should total it. 5,35,680. 5,35,680. Okay. Just to subtract opening stock and purchase amount. Subtract opening stock and purchase amount. How much is the gross profit? 3,11,040. 3,11,040. Then you come to this department C. Just you total it. Department C, 7,49,520. 7,49,520. You subtract opening stock 12,240 and the purchase 2,88,000. Then you will get 4,49,280. 4,49,280 for the gross profit for department C. Okay. Gross profit for department A, 1,46,880. For department B, 3,11,040. And department C, 4,49,000. I have given the workings for all the sum. Thank you.